Yo, you are listening to the Money Matters podcast with myself, Jack Mallers. We've got Dylan Lytow, and for the first time ever, we've got William Mallers Jr., aka Willie, aka my dad, joining us as well. What's going on, Dad? How are you?
I'm excellent. How are you guys?
Oh, it's good.
I'm good. Dylan, how you doing? Good. This is our first remote recording as well. So took us a second. I think we got everything figured out. Everyone sounds good. And so before we get started, who sponsors this podcast? Who pays the bills? We do. We don't have any sponsors. The reason we do that is because we don't want any of our messaging to be co-opted by another corporation. The point of this is just to have unregulated, authentic, pure conversation about Bitcoin, about markets, about money. And so technically Strike, the company I founded and I'm the CEO of, sponsors this podcast. So if you do want to support us, go buy your Bitcoin on Strike or store your Bitcoin on Strike or move your Bitcoin on Strike or do all your Bitcoin shit on Strike. We actually have a really cool announcement coming up the day after this will be released, I believe, or that week. So we're always releasing new shit. We're on the bleeding edge of Bitcoin. So if you want to support us, that's how you can. But other than that, I'm fired up about this. My dad has taught me everything I know. I mean, people know I dropped out of college, but I think sometimes people think I dropped out of college and went straight into the Bitcoin mempool, and that's not true. I dropped out of college and I was very lost, and my dad grabbed me, said, "You're going to come boxing with me." And I would just kind of get my ass kicked every morning. And he's like, "You're going to get into Bitcoin with me." And fast forward a decade and I am where I am because of him. So it's an honor to have him on. He's my hero, but he's also the smartest guy I've ever known. He's got more he's twice my age. I think you have over 40 years of market experience. I'm 29. So anyway, honor to have you on. And I'm pumped about this.
Thanks, Jake. That's not exactly the way I remember it. My memory is you, me, and Cookie were all, yeah, I might have had a 2-day lead on you, but it was we all pretty much figured it out together, right? I mean, there wasn't a lot of good resources back then. That's when you had to go, pretty much meetups is how, local Bitcoins is how you built the position, and meetups is really how you learned, right? You just start going and ask questions. There wasn't a lot. There were some YouTube videos, but there certainly wasn't, the amount, of copy now that
you're never going to give yourself the credit you deserve, but that's fine. I've been trying for a decade now. It's fine. But before we do Bitcoin stuff, just so people who don't know you can get to know you, I think we got to start with non-Bitcoin. So before I was born and you got into Bitcoin, you were raised by the chairman of the Chicago Board of Trade, founded and then sold a futures brokerage. I don't know what part of your early life you want to tell the internet, but whatever you want to give yourself a little credibility, give us context on your experience and where you're an expert.
Sure. I mean, I'll try to make it quick, but the, your grandfather, senior, he was a part of a generation. He was chairman of the Chicago Board of Trade in 1969. At that time, he was the youngest chairman ever. The exchanges were, the Board of Trade was grains and the CME was, cattle, pork bellies, and maybe they're agricultural commodities. And they saw the opportunity to what they had built, competitive open outcry pricing, forward pricing was applicable to financial futures. They used to work with the University of Chicago a lot, very free market, think tanky kind of place that they would work with the exchanges. They worked with a lot with the local banks a lot. I remember one of the things that your grandfather did I thought was so clever is he used to trade employees. I'll loan you guys one of my exchange employees, and then the Harris Bank, you loan me one of your bankers, so you can not only start to understand what it is we do and how capital intense and everything, but you make some friends, right? You got a name and a number you can call when, so they worked really hard to build that industry. And like I always say, I got a chance to stand really on the front row and watch, pork bellies and wheat come in a pretty quick time to be pricing, treasury, stock index futures, foreign currencies, and that all happened in like whatever 6, 8, or 10 years. And you would never think you're going to get a chance, right, to watch another financial revolution. But sure enough, no, we said, like I said, I had Andreas Antonopoulos in the front room of 624 Central Street telling us exactly what was going to happen, and there was exactly nothing that was going to stop it. Right.
Yeah.
So,
Well, that's the coolest. I tweeted a photo of us that's kind of old. People are like, "Oh, your dad's shorter than you," which is also not true. It's an old photo. I was standing on top of something. But the photo is you holding a UST bond at the Board of Trade with a note in the background. So there's a really poetic story of my grandfather, your dad, really creating a financial market here in Chicago, which is the futures industry, and specifically forward pricing on commodities that we consume, like that we got to put in our gut, because if that market gets haywire, everyone's going to be puking and shitting on themselves. And so creating like a really moral, ethical, principled financial market, and then to watch Bitcoin, and you and I do that together. But before we get there, I know it's your personality, but I can't let you undersell yourself, because it's going to become so relevant. Like you traded the 88 drought, for example. So before we get to the founding of Bitcoin, so first of all, the Chicago futures market is the biggest futures market in the world, right? To this day. Right. So just so everyone's aware, the futures market that was created in Chicago, and you know, there's also, Dad, I know you tell me to never pay attention to this shit, but the people on the internet that think that you and I have like a 911 butt dial to the head of the state and that we know the CIA or whatever, the Chicago futures market wasn't built by my family. In fact, none of my family is even in Chicago anymore. So you got to give credit where credit's due. It's a massive industry that was built by a lot of people. But what he's describing turned into the biggest futures market in the world still to this day. So the largest volume financial products are futures products, and the largest volume of those are traded are here in Chicago on the back of everything you just described, right? And so I guess you graduated college. Senior was very a key component and a founding father of sorts in that industry. And then you guys founded First American before I was born. Yeah.
Yes,
Tell that real quick.
No, well, yeah, one of Senior's theses was always, if you want to understand the trends in our business, it was always helpful to watch Wall Street, to watch securities. He goes, because whatever, oftentimes, you know, whether it's electronic trading or in this case discount trading, some of the trends, you know, would start there. So I remember Senior and Les coming in my office one day. They go, you know, because we were running real estate at the time, and saying that Charles Schwab is just eating market share by just, you know, low pricing. You know, there's a big do-it-yourself. All you got to do is walk past any bookstore in the financial district in the 80s. It was all more education, do it yourself. And, you know, discount was the big trend, and they swore that they could do it cheaper than anybody. That was one of their quips. It's not really a compliment, but you know, when you work for Rosenthal, you know, his name is Les Rosenthal. So when you work for Rosenthal, you work for Les, was always the quip, because that was his thing. The only way, Billy, you're going to make money in this is if you do not spend any. So we went bare bones discount, pretty much as close to scratch as you could, and just built market share for a couple of years, and boy, did markets cooperate. So you really didn't have to do much. All you really had to do to take 10% of that market was a little bit of marketing, but basically risk management. If you could, because I mean, what are you going to do? Like I said, whether it's the 87 stock market, you know, or the stock market in the 80s, the grain markets, whatever, if you don't really need to write really clever advertising to get people like to buy into the 88 drought. You know, that on a 3 to 5% margin, that market doubled. So you don't need too many of those winners, and you know, to make your year. But you got to be able to manage the risk. You know, that was the big dangerous part. So I think that my experience really is a little bit of marketing, operations, but primarily risk management.
Yeah. Yeah. And we've talked about that. That's one of the funniest when we would go to Bitcoin meetups way back in the day. We weren't cypherpunks necessarily, or you weren't a coder, you weren't a cryptographer. You had to have been one of the first financial market innovators and traders in Bitcoin. I mean, so long ago. But yeah, real quick before we get into the Bitcoin stuff. So yeah, being part of building the futures industry in Chicago is legendary. I mean, that's your dad, my grandfather, the work that we're so proud of. And that is incredible. You founded Discount Futures Brokerage, First American. You sold it to Man Financial. When did you sell it to Man? I was born in 94. I know I was alive, but I don't remember. 99?
2001. Yeah.
2001? Okay. So I was 6. And yeah, I remember you said as soon as everything started to go digital on the trading floor, you're like, fuck this. This is not my game. I'm out.
I would love to make it my game. I think I had one guy in my IT department, and I mean that's just the amount of investment and bodies you're going to take to transition from open outcry to electronic trading was just way out of my scope. So, but we were always, like I said, we had a good name, reputation, good marketing, and so that was it. I could either transition to being a front end sales and marketing, just basically, just a front end, but now I'm raising money so that I'm raising, clients so that you can make money off them. It just seemed easier just to make the exit. So that's all we were going to be. And
well, you're right. I mean, that's what the industry is today. Like a lot of guys collect clients like Robinhood and they sell the flow to Ken Griffin and Citadel, right? Same thing. Yeah. Well, you were right. Good call.
That was time to get out. I wish I could. God, I love that business. But yeah, I don't think family owned and operated, there would be no way you were going to transition. But the interesting thing was everybody was family owned and operated because it was kind of an idiosyncratic, quirky. So we did not have to compete against a lot of East Coast firms or, more of your traditional financial centers. I didn't lose anybody to London Discount. Not only did they not only did everybody not see this coming, but we actually built a state-of-the-art monster trading floor in the late 90s when my brother were like, okay, now close it, because I talk to customers all day long and they do not see any value in trying to get their order down to a trading floor. They would much rather be, screen trade. They can manage it and see it. And then if you're trying to trade through a trading floor, it's a mystery from the time you hang up and the 90 seconds it takes, right, to transmit your order down there. So what in the world are we doing building that monster building, right, so that we can immediately turn around and close it? That's just, I don't know, too close to the business. Expansion always meant more trading pits as those guys were growing up. But no, that industry did not see the internet coming and didn't. And they didn't know customers, right? Those guys primarily, trading floor guys are, industry insiders, but are not on the phone with customers all day long. I got to write ads for customers. So I can tell you, if I write an ad for the super duper wheat broker I have versus writing the ad for a lower rate, quicker execution, or perhaps, some quality research opinions, that's what people wanted, but they did not see any value to trading floors.
Before we transition into the Bitcoin stuff, you've referenced a few times, looking East Coast, big East Coast firms, checking the securities the equities market, New York, Wall Street. Some of my favorite stories growing up is when you would explain the difference between Chicago and Wall Street. And you saw that because Chicago got Bitcoin way earlier too. But I'm trying to think what story, like maybe the Hunt brothers story. How would you best explain that Chicago was trying to solve what they considered moral, ethical problems, build an industry that, it was not insider trading, know a guy to know a guy, political garbage. That Chicago is really like, I don't know, what is it, like brick by brick, salt of the earth people. that really, because sometimes when people think, oh, what's the difference between Wall Street and the Chicago Board of Trade? And if I were to tell you that, you'd be offended, right? Before we move on to Bitcoin stuff, what's the best way? Because I do think it's relevant when people get to know our personalities and how I talk about Bitcoin and how I curse. I mean, I curse because you curse, and I got it from you. And just kind of the attitude that I think is important to us getting into Bitcoin and a lot of your opinions that you taught me. What is the Hunt Brothers story the best one?
I don't know. Hey, no, no, the Hunt Brothers. Great story. Yeah, it was great because they were going to corner that market. Yeah, they were all in. I'm sure a lot of their thinking was probably going to sound very familiar to Bitcoiners. It was the 70s, and we had, Nixon took us off the gold standard, prices, double-digit inflation, and they were convinced that was here to stay for good. They were wrong. The Volcker, clamped on, and I think he drove the prime rate of interest to something like 19%. So nobody's buying a house. He just put the brakes on it, but that got inflation back under control during the 80s. The Hunt brothers did not see that one coming. They tried to buy all the silver extant, period. They tried to just lock it up. They're big West Texas oil men with just monstrous appetites. Senior called them in to I don't even think he was chairman. He was on some oversight committee or pit committee or something. And I told you, it reminds me of another story. I'll tell you how during the 87 market crash, whether we stayed open when the underlying, or 9/11 or one of those things, New York couldn't get open. Well, do you keep the derivatives product open while the underlying isn't? And somebody comes down and asks, ask your grandfather, and he did not know that was his job to answer it. He goes, oh no, you're on the floor services committee or something, so that actually is your call. Oh, okay, I didn't know that. But that's the way it is, guys. I don't know if that helps, just to give a little flavor for how they ran things. But yeah, when the Hunts tried to corner that market, Senior called them into Chicago. And he said he was enormously impressed because these are billionaires. They didn't send a secretary or something or an underling. He goes, they both came and they were both dressed impeccably. He goes, it was hot summer and they had, proper three-piece suits and knotted ties and, sweating profusely. And they just tried to talk their way out of it. And they're like, okay, what about, now that's your cousin, isn't it? They go, oh God, is he long soybeans too? That's your secretary. That's your neighbor, right? And because they just bust him on. And he goes, either you lighten it up or we're going to lighten it up for you. He saved that type of, I know they saved the silver contract. I know they saved because, the Hunt brothers they weren't going to take no for an answer. They pretty much destroyed the COMEX silver market. It was, up the limit, down the limit, sloppy. You'll find out whether your order's filled the next day. I'm not kidding. It's so dysfunctional that you really couldn't service retail customers through it. But, they saved our silver contract. I don't know. It was a way those guys just knew markets so well that somebody like the Hunt brothers was just not going to be able to beat them.
That's just my favorite. That's my favorite story about my grandfather is that.
And he said they were just so polite and formal. It wasn't like, yeah, okay, the jig's up, you got us. How much liquidation do you want to do? Not at all. They were like, oh, the one thing is where they called one of their relatives that little Dickens. They had some charming expression. They go, okay, that person's a relative of yours too. And they went, that little Dickens is long, 1 million bushels of soybeans. Yeah, he is. And we know that's you too. You're just spreading it around. Those guys grew up, so they knew every trick. They knew every, hell, there used to be like natural dysfunctions in markets. Like, for example, in order to satisfy delivery requirement, you need to get wheat out on the St. Lawrence Seaway. which is very reliable until it freezes in the middle of winter. Well, sometimes if you get unusual early freeze, you can have a difficulty meeting the delivery requirement. There's nothing to do with supply demand of wheat. It's just the technical requirements of the contract require. Obviously, that's how it tethers to the underlying. We didn't have cash settlement back then, so we had to have physical delivery. And if that got gummed up, that's those guys they were just really good at market mechanics and taking money, out of markets. And like I said, I would have loved for you to see your grandfather trade, these crypto markets, because I get a lot of the same, free for all up for grabs that this market was 10 years ago. Reminds me a lot of, kind of playing without rules, playing without a net, the way those guys, when those guys started financial futures, they would literally come in like, interest rate futures are fixed rate instruments. So it's an 8% yield. So if you think interest rates are going to 10%, you want to be short it. And they would come over, the guy, your dad and all his buddies are keep telling me this is where the action is. There's no trade going on over in, the oat pit. So how does this work, Billy? And I go, well, you're trading interest rates. So I think interest rates are going up, inflation. So I would want to buy, right? If I long interest rates and they go up, I go, no. If you think interest rates are going up, you want to sell. And they're like, whatever. It was just a real cultural, almost language barrier to do what, in addition to regulatory barrier, really to accomplish what they accomplished. And I think one of the main things they did is they did it kind of under the radar. I don't think, we, as opposed to this industry, that has to fight for things like ETFs very publicly, and Senate hearings and all, and a lot of IRS involvement and all of that stuff. I think they just kind of snuck it in under the radar. I don't think it was really a big deal in the early years that we were clearing, stock indexes and interest rate futures in foreign currencies. But then bang, all of a sudden, largest contract in the world.
Yeah, that's my favorite story of my grandfather's, the Hunt brothers story, was Nixon removes the U.S. from the gold standard, inflation out the wazoo. Some West Texas oil family tries to then corner the silver market on his Chicago exchanges, and he was like, "Get the fuck out of here, kick rocks." And they went and they fucked with the silver market for years, but they did it in New York. And that's kind of always been my understanding of, you never back down on your principles. You're always a good man. You do what's right, no matter how hard it is. That's how I was raised. And that's how I consider Chicago, Bitcoin, and New York and Wall Street and people like fucking, I don't know, Jamie Dimon, just couldn't be further from how I was raised. That's my favorite story. All right.
Giant egos that corner markets in my era was the Hunt brothers. And where are they from? West Texas. Giant egos that try to corner markets and colonize Mars and stuff. Where's Elon? He's from South Africa, right? But where's he going? West Texas, right? Isn't that where
yeah.
I don't know, something about the water down there. Those people, they have enormous appetites.
Yeah. All right. Well, people follow us nowadays for Bitcoin. I thought that was important, though. You've been in markets for so long, and your angle of getting me into Bitcoin and you getting into Bitcoin was from a markets lens. It was not from a cypherpunk. I actually don't know if you would consider yourself a libertarian, but I think it was primarily from markets and watching financial instruments and living through the divorce of the gold standard. But what was your orange pill story? Because you orange pilled me. I mean, I know the story, obviously. I was raised by you, but who orange pilled you?
Oh, Mike Krieger was a libertarian blogger. He probably writes more about politics, which doesn't interest me that much, but he does have a trading floor background. And, he came up on a trading desk. And so whenever he wrote about financial markets, I always made a point to listen because he really did. He understood it. And I remember the article because Bitcoin was out and about. You heard about Cyprus or you heard about Silk Road. And like I told you, when I back in the early days, we used to give $100 of Bitcoin for Christmas presents. I gave, Jeff at the gym, I go, here, whatever, you don't got to do anything. And I put it in a drawer. You'll thank me in a few years. Give him $100 of Bitcoin. He goes, yeah, you know what? I got buddies that do the whole Silk Road thing. I don't want nothing to do with it. I go, well, it's not just Silk Road, but that was pretty much, beating capital controls and transacting, was early Bitcoin.
What was that? 2000?
How much Bitcoin is that? $100.
2013.
Yeah. I know that was one of the greatest things, because when I thanked them, when eventually I was just a subscriber, right? Just reading his financial books. I hadn't met him, but after we got involved in Bitcoin, we ended up, we met him and became friends, and I thanked him and everything. He goes, I've been writing about this since 2011 when it was in single digits. And you were just two years late. So I know if I'd read the Krieger 2011 article, I'd say, and Bitcoin was 1/10 what it was. I know. Would I? Fun to think. Would I have 10 times the Bitcoin? I don't know.
Yeah.
He's been writing about it since I think it was like at $7, and we got our first 5 lot at 98.
Jesus.
Yeah. Well, I remember. I mean, I don't want to dox. People speculate enough about our fucking family. I know you don't read the internet like I do. I got to read the internet. It's part of my job. I'm used to it at this point, but I don't want to dox or go too much into our Bitcoin story, but I'll never forget, growing up under you and watching you trade Bitcoin. We would just be doing casual things. And then the way that people stay humble and stack sats now, you were doing it 11 years ago. Like, we would be cleaning out the garage and you'd be like, what's that sound? We got to go buy more Bitcoin. You run in the house. I was 18. I just dropped out of college. I had no idea what you were talking about. But fucking insane.
No, that is true. Because I know a lot of traders, whatever you got to do to clear your head, walk around the block. I know guys would, take their break and call home, right? Just helps ground me just to know what the kids are doing, right? Because there's got to be a reason why we put ourselves through this, and just walk around the block. I remember once, whatever it was, my walk around the block or hit a punching bag, and I was working 2-minute rounds, and I didn't even make it to the bell because this market is just going higher, and you're not gonna sit there and watch it, right? You gotta. I know I started like everybody else started, DCAing in, right? I don't want to sit in front of a screen all day and try to time the market so much. Although I know I can do that, but just set a weekly DCA. I'm sure that's a popular feature for you guys. Only as soon as you figure out Bitcoin, you're like, now you got to just write that. You got to just bite the bullet and get long. And that was in the hundreds. We were still in the 180s.
Yeah.
What?
Tell them when you ran from the playground when Silk Road went down.
Oh yeah.
Ran back to your screen.
Oh,
that's my favorite. The Silk Road saga is when you stamped your legacy. A Hall of Fame Bitcoiner, the way you traded the Silk Road stuff. That's my.
The one was that that's the end of Bitcoin. Bitcoin collapses 40% on Silk Road. Silk Road says Bitcoin's over, and 40% of $130 was about $40 dropped down to, I don't know, it was coming from, it was in the 2s, right? And I gotta buy this break. If anything, clearing out Mt. Gox is bullish, right? It's certainly, getting rid of the stigma. So we were on the parking lot. I ran back. I was picking up kids, and I ran back because I got the notification on my cell phone, ran back, tried to log in. I think me and everybody else had the same idea because I could not get into an exchange. I was pretty sure I was trading at Coinbase at the time. I don't want to pick on those guys, but it wasn't their fault. I'm sure they just tilted. Nobody could get in, and just keep trying and try. By the time I got in, and I remember because I used to keep a trading log, and you can see that I'm building the position as it's rallying. I'm not buying, I'm not adding to a losing position. I'm getting momentum. And I put a note SR because that's the only time I bought where the purchase is lower, materially lower than the previous dozen, right? Because I was, 180, 190, 200, and then boom, I'm buying 175s again. And I said, why did you do that? I was trying to get in on that Silk Road buy, but it was hard.
Oh,
it was hard
well,
to even get a market.
That's a different story. Yes. Okay. So just for context for listeners, I dropped out of college. I graduated high school spring of 2012. I dropped out of college fall of 2012. So I enrolled in school, I don't know, maybe September, and I didn't even make it to Thanksgiving break. So I think I lasted like a month. And so that was fall of 2012. And then you got Brooke, who's my stepmom, who's I think sitting in the room there. You got us all into Bitcoin in early 2013, and then did Gox go down in late 2013?
No, you bought your first 5 lot in
August of 2013.
And
When did Gox go down?
February of 2014.
Yeah, well, 6 months later.
14. Because I just remember running up to your room, and I just assumed we were fucked. I had just gotten into this thing. I was starting to get the hang of it, and I ran up, and I was like, "Oh, it's over." And you were like, "No, the opposite. This is when you buy." And yes, you're right. The other, I remember that, our family bid on this Silk Road coins that Tim Draper ended up outbidding us by a mile. But incredible shit. I know. I mean, I don't know, Dylan. Everyone
over the market.
He bid over the market by $100, and Bitcoin was like $500. He bid over the market by like 20%. But to your point, it was just to
right. If I want
to get the size
market, right? I know it was a lot. I assume, but and to make a splash.
How big is that? A lot of big.
Let me look it up. I think.
The first one
was it 6,000 of them or something like that?
It was like
holy shit.
I thought it was 20,000.
20,000. 30,000 coins. 30,000 coins.
Dude.
Yeah.
I was sure it was. I was sure it was going to be a sloppy auction. Who buys Bitcoin from the government, right? It just seemed to me it was going to be, and I don't know. The marshals seized property and auctioned it as, I don't know if I ever told you this. That was one of the first cars I ever drove. Is we bought it at a Marshall's auction because you could get really good deals. And those guys, that was actually a Porsche. I think I know it was my 20s, but but I think I bought it for $5,000 or something at a Marshall's auction. So I already knew those guys. When they liquidate seized property, you can get a good deal. So I think Bitcoin, I bid a good $100, but I had scaled down, starting at like, I don't know, $80, $90, $100, just in case it's a real sloppy auction. And to bid over the market, I just never saw that one coming, right? I think, I know what you're saying, like, because for the quantities I buy, I can fill that, at an exchange like Coinbase. But for those type of quantities, but so what? So you can still call Coinbase and have them fill it over the counter and stuff. You don't have to butcher the order that badly. But I figured he was probably doing that, right, to bring notoriety to a lot of the businesses he was funding, right?
Maybe.
Kind of put himself on the map.
Know. That's an expensive premium. But yeah, it was a legendary moment for our family because what was it? The government accidentally like a BCC response. And so there was like so you would have to submit your bid to the government. So the government's auctioning off coins. I think it was 30,000 Bitcoins they were auctioning off. And when you submitted your bid via email, I think they responded to everybody. And so everyone knew who the bidders were, which was a big red flag. You're not allowed to do that. It was an accident, but it's the same accident of, I accidentally replied all to, my family's Thanksgiving thread. And I said that my uncle's food sucks. It was like an accident like that. They're like, oh shit, I didn't mean to hit reply all. And so you could see who was bidding for the government's Silk Road coins. And it was like Tim Draper. It was like, Andreessen or something. And then it was like the Maller's family computer living room MacBook Air or something. It was like our family was just right in there, like trying to stack as many sats as we could.
I know. It was the 2013 family computer. And I was very proud that I was third on that list. And I'm sure it was chronological, but I just happened to be sitting there when they announced the auction. So I'm surprised I wasn't first, because I was just sitting in front of my computer when I got, the notification that the marshals are going to auction off their coins. And so I submitted so that I could bid. And when they answered, they would respond, I don't know, acknowledge that they got the bid or something. And then somebody hit reply all. So you got everyone who submitted a bid. And just because you're getting an email address doesn't mean I know who you are. After all, the 2013 family computer doesn't have any personal data to it, but there were a lot of ones that did, like .drw. So I know if you're from Chicago, that's the biggest trading firm, the biggest CME trading firm.
Yeah, John Wilson.
Is DRW, is Don's shop, and we knew he had bids up and down. You just knew it was that reply all. I knew that my premise, hoping for a sloppy auction, after all, cypherpunks don't want to buy government Bitcoins, was not correct. That was going to be a auction. And there's no reason for me to pay over the market, right? I mean,
no. And before the internet starts to speculate, we were part of a syndicate. You were not bidding for all 30,000 of them.
No.
Of course not. So no, you just gotta be careful. I'm telling you, I probably spend more time on Twitter than you. People think that you somehow have an in on the state, and that's how I got my first venture check into Strike or something. So you gotta be careful. That's why sometimes it makes me a little nervous.
It was probably Barry Silbert, right? Yeah.
I think it was Barry Silbert that put together a syndicate. But I just get nervous talking about some of her family stories because I don't want to, whatever. You're a legend. I mean, you've been staying humble and stacking sats for 11 years. It's fucking ridiculous. All right. Well,
you know what? You know how? Yeah, my brother and sister. When I was a kid, Uncle Tom always had a better feel for interest rate markets than I did. That was his first job. I don't know. Having your first job, obviously, I cleared and managed risk across every imaginable market, right? But the first market I had was arbitrage clerk in the foreign currency pits. And I don't know, I think I just had more of a fluency with those markets. And in the same way, he was always better at T-bonds. That was his, that was his, first job. I don't know, foreign currencies have the one thing about currency markets that I don't think exists in any other market is the scope and the size of it. So, like, governments will used to always, intervene on or manage the value of their currencies to help their export industries or whatnot. But the foreign currency markets have none of that. It's just too big and powerful a market. I thought it's just a great way to learn. And then, like I say, so that was my break into the business is through foreign currency. So here I am years later, and the internet has its own currency, and nobody told me. It's like, you all didn't tell me about this. I'm out here coaching Little League, and and the internet cooked up its own currency. I gotta trade that, and it does. I think that background in foreign currencies, it helped a lot. Big currency markets tend to trend more. They have stronger, more powerful iterative effects that can enhance, and trending. I don't know. I think that really helped me.
But here's a story that'll make everyone listening now puke a little bit. And we've got a bunch of these, but that local bike shop guy didn't Cookie. So your wife, my stepmom, buy a bike from him for 7 Bitcoins. Is that right?
Yeah. Yeah. Well, now it takes a little explanation because you remember back then, the early Bitcoiners considered your job to spur adoption, and that, or it meant go spend it. Go to the local, right? Go to D&Ds, go to local grocery store and say, you guys got any interest? Because I guarantee you, Bitcoiners are loyal and they want to spread adoption. If you start accepting Bitcoin, you'll get another dozen customers that you never had before, and they'll will go out of their way to shop through, because remember the mindset back now, it's more like just hodl, right? Don't spend. But back then we thought spending was proof of concept, right? To get
Adoption,
it
yeah.
moving.
Well, we did.
So
What
I
about
did.
Christmas?
Like for
What
6
about-
or 7.
What about Christmas? You remember gift? Wait, there was a Christmas. Fuck, I'm not gonna botch. Was it 2013 when Bitcoin was really rallying? There was a Christmas when Bitcoin was rallying, and my dad put money on gift cards. So like, he would put $200 on a Nike gift card, and we're sitting in Michigan Avenue in Chicago. He's like, "All right, now you can go get some shoes." And Bitcoin was one of those like hyperbolic rallies, and every time we would come back, he was like, here's another gift card, because it just kept rallying. Bitcoin just kept going up, kept going up, kept going up. That day, it was up like 20% that day. And that was just a Christmas I'll never forget, where we were running around with gift cards through Chicago, just offloading Bitcoins into eventually Nike shoes. And we were just having a blast with it.
Oh no, this is where the humility ends on my part. That was I dare any parents of 6 kids that really, we really enjoyed Christmas and I want to make it fun, that can do your Christmas shopping while sitting in a bar watching a Bear game. Because you guys, because we do Secret Santa, Jack's got to get a present for his little sister or something, and then you guys kept coming back and Bitcoin kept rallying. And sure, I'd get her 2 of them. Yeah.
Yeah. All right. Let's talk more specific Bitcoin stuff, because I FaceTime you constantly, and a lot of my opinions on things like the halving and stuff almost always come from you. And so I'd be curious, you just said back in 2013 you knew this market was going to bid higher, you knew it was going to go up, so the number go up technology that everyone now talks about, you seem to hold that opinion a long time ago. What was your Bitcoin thesis? Why did you think it was just going to go up and you needed to do everything you could to own as much as you can?
Well, I mean, if you've been if you've had a career in the financial markets, it's how enormously difficult it is to get money around. Well, if you've, for example, been to college and you've lost your wallet, you know how enormously difficult it is, right, to get a meal, right? That I used to, for your listeners, Dill, I don't know if you know this. Anytime I drop a kid off at college, I take the sock drawer out and take an envelope and put a few 20s in it and scotch tape it under the drawer, so that when you call me, you're like, "Oh, I'm starving and I lost my wallet." Okay, there's $40 under your drawer, so you can at least, right, get to the commissary. The best part of that story is just the juxtaposition. The technology and connectivity has gotten to the point where I could watch, GPS, whatever, GPS him, to know exactly what corner, what street he was on, and trying to get him to a place where I could send money, try to get him to a Western Union. So the technology is so awesome that I know what street corner he's on 2 time zones away, but I can't find a Western Union that's open. It's like, this is a ridiculous state of finance that where technology has advanced so much on connectivity, except money is still exactly how it was when I was given margin calls in 1980, right? I mean, it just has not advanced. And to think of if we'd have had the tools back then, gotta be a lot easier to send your kid to college, that's for sure, if you'd had these tools. You wouldn't have to tape $20 bills under a sock drawer.
But let's talk us 3 talk about the halving, because long ago you described to me that, I think you told me, if the way they caught Silk Road was not through Bitcoin, and they caught Silk Road through finding the server, and you told me that, to me, means this thing is unfuckwithable. they're not going to be able to shut it down or change it if someone is selling heroin on the internet in their face and they couldn't shut down Bitcoin. That means they're also not going to be able to change the monetary policy. And that, when you described that to me, was like, in that moment, you knew, oh shit, this is a fixed supply asset, whether they like it or not. And oh, by the way, whoever the fuck made this thing put in an inventory reduction of 50% overnight every 4 years. So it's going to really like puke rally and puke drop over and over. You like, what's your take on Bitcoin's fixed supply, the halving? Because I know the payment stuff, and I was an idiot. I lost my fucking debit card in college and I couldn't eat for a few days. But more the fact that this has a chance to run up and beat gold in market cap over the next 2 years, in my opinion. What was your thesis around that and understanding the fixed supply and the monetary policy Satoshi put in place?
Well, like I said, to get price always finds supply. If you get the price of wheat high enough, I will grow it in my backyard. I probably actually won't have to, right? Because there'll be all sorts of rooftop, like out here, there's a lot of rooftop solar panels. You probably have like a acre rooftop bushel if you get the price of it high enough. Yeah, price always finds supply. And what's fascinating about Bitcoin is that you cannot do that. Price confined, you get the price of Bitcoin high enough, will proliferate a lot of shit coins. You'll get an entire industry of arbitrages on the rally that Bitcoin's doing. But the fact and the consensus mechanism that ensures that, I just found fascinating. Because like I say, you've been around markets all your life. You're going to get to a price where you will find enough gold if you get it high enough, right? Isn't Elon always threatening to extract it out of a comet somewhere? Right? Can't do that at current prices. It's not viable. But you 10x it, you can go find more of it. And the fact that you can't do that with Bitcoin is endlessly fascinating. And it's surely the rule that's going to be broken, right? That's what all early Bitcoiners would say. That would go, as soon as we get close to 21, we're just going to make it 31, right? Put a new line of code in. I go, well, the two problems with that is, yes, everyone has already done that. That's Litecoin, right? It's exactly the same protocol with one line of code changed. So we already know you want to create more and more Bitcoins. Fine, you can 10x it. I can create Billcoin. I just changed that line of 21 to 201, right? So no, we already know what happens. It is the way the industry is evolving, is that more of those iterations are valuable for other things. But store of value is Bitcoins. Ethereum is not a store of value. Litecoin is obviously 1/4 the store, any store. It's more transactional, right? Litecoin is transactional. Ether is whatever a developer's toolkit, whatever that means. You're a developer. But no, store of value, it does. The way the industry has evolved, I think Bitcoin is the sole standard.
I'd never heard that. That was fucking hilarious. Because the idea of if you get the price high enough, you'll find more supply. That's the whole point of finding a hard money, is what money do we have access to that's the hardest to make more of, because then it will be able to retain the monetary energy you put into the thing. And I'd never heard anyone say the higher you get Bitcoin's price, the more shit coins you'll get, which is actually hilariously true. That's the way that humanity tries to inflate this industry and arbitrage the trend of its price going up.
There are two ways to create more Bitcoin, right? One of them is, like I said, change one line of code and you've got yourself a shit coin. And the other one I say is, I can get 10 times the Bitcoins I want, just move the decimal place over, which is kind of the way it works, right? I mean, the more demand there is, we're not making any more, but we just moved the decimal place. Yep. Now it's 10x.
Yeah, at Strike we implemented Sats. I use my Bitcoin wallets in Sats now. The price is high enough. My balances are high enough. It makes sense. What about the monetary policy Satoshi put in? Because when I remember asking you, this guy says that the halving's priced in. This guy says the halving isn't priced in. And I mean, you're my source of truth. I'm like, is the halving priced in? I mean, it makes I'll argue both sides. In one side, it makes sense because the code was published in 2009. So if markets are truly efficient, everyone knows it's coming. And so it's hard to not believe that it would be priced in. On the other side, according to historical data, boy, does it look like it's never been priced in, because every time you go through a halving, the thing shoots up like a rocket as if no one saw it coming. Now, you explained to me that it was more like a commodity inventory reduction, which is not taking one side or the other, which I found fascinating. Can you walk us through that?
Yeah, I think in grains, carry out is just the amount of grain you grew that you did not consume that year. So if we consume 8 million bushels of corn, but we grew 9 million, and we're going to add 1 million in storage. We're just carry it over and markets with a lot. I know what you're thinking. If I grow 2 million bushels more than I need, or 10 million, what difference does it make? It's all, how does that weigh on price? You still have more than you can consume, so you're still adding to carry out. But I think just with markets need to, if carry out is lean, if it's tight, there's only 6 weeks of corn left, then then markets have to start pricing in tighter inventory. Yes, we still have more than we need. That should not drive the price up too much, but since you don't have a cushion, any reduction is going to spike it. So, for example, the 88 drought was, a terrible drought. I know what you're thinking. 1930s, did it wipe the crop out? No, we lost I think we grew about 20% less, but the price doubled. Right, kind of a disproportionate reaction, because you don't have enough carry out, then, because that's a consumable commodity. So I just think markets without carry out is similar to markets without, is similar to how I approach halvings. There's just less cushion if something happens. If major retailer wakes up tomorrow, Amazon accepts Bitcoin, or whatever's going on. In El Salvador's neighborhood, 3 more nation states want Bitcoin. Well, you just have less of a cushion, and I think more of these potential one-way spikes.
Yeah, or the ETFs, right? It looks like the ETFs are just mopping the floor and picking up Bitcoins. Wall Street wants them all, and they're outbidding the new supply, right?
Well, so far, yeah, but they had to absorb, all the one of them fail, right? Or
Silver.
Yeah. So it had to absorb all of that. No, I do. I think this market is just it is going to act like a market without a lot of cushion. It's going to be tighter. It doesn't necessarily mean it's going to go up, but it means any nation state adoption, retail adoption. Now that you've halved it, I always go a third, right? Of the extent of the Bitcoin that exists right now, estimates are pretty conservative that a third have been lost, right? Because remember, early days of mining it in your college dorm when it wasn't even worth a penny, probably people didn't take proper security measures. So let's say a third's lost. Let's say a third is in the hands of people like me, that it's locked up in a physical device and a multi-sig relationship, in a safety deposit box somewhere. I could not sell it right now if I wanted to. I'd have to get your signatures, and the third is the stuff that we price every day, that we trade every day. So if an ETF is going to take a material amount of the tradable third, yeah, the market's going to have to go find some supply. You're going to have to get the price high enough to get people like me to go dig it out of their safety deposit box, or I don't know what price that is. Markets like round numbers. That's why I always, as the last really material adjustment we made to our position was at 50, right? And round numbers, right? 51, something like that, because that's a nice round number where you can take a pause and digest. And I don't know. I know whatever everybody seems to like 288. That's a real popular target for people. Next big round number is, is a new high. I'd say would be the next all-time.
I find this halving, or at least I think it's unique in a way that it'll be the first time that Bitcoin becomes, in theory, the most scarce asset on planet Earth. From a stock to float perspective, overtakes gold in terms of how scarce it becomes post halving. Do you think that will materialize in any sort of upside shoot, or do you think that this will be just another sort of run-of-the-mill halving like we've seen in the past?
I mean, the fact that it's now more scarce than gold, I don't think that sounds like a trivia question. Well, and gold plus, I think you guys, any sentence that contains the word gold, what do you want me to tell you? I've seen more people lose more money trying to get long gold in my career than any other market. It just has, I don't know, the thousands of years history and the storage of wealth. I mean, you see look at all the advertisements that have gold has been protecting portfolios. No, it hasn't. Gold didn't protect anybody. I guess protection in that you're basically sidelined. But I don't know, the fact that after having that you produce lower amounts of other assets. No, I think that's really kind of a trivial question.
That was my take too. The reason I like your framing is, one, people price Bitcoin against its 21 million supply cap. Nobody prices Bitcoin against its monetary policy of halving over halving, of, oh man, that last halving was successful. Well, now I'm going to value Bitcoin more. We all of us have assumed the halvings are going to be successful. If the software stops working, then we're all fucked. But that's already priced in, and we kind of price it in. Whatever I own is out of 21 million, although they haven't all been created yet. I think that's how the market thinks of it, Dylan. The reason I like the inventory reduction piece is, to me, that explains what you see in a chart. Is when you see the thing just shoot up after a halving, is because there's less cushion. So I think Dad's right. I think you're right in that there's no thing that you can code into a monetary policy that forces something to go up. Something only goes up if there's more demand than supply. So if you think Bitcoin is going to go up, you're implying that there's going to be continuous demand increases. And so the point of a halving, though, is whatever that is, if that is a Fed policy change, if that is someone elected as a US government official, if that is nation state adoption, if that is Elon Musk or whatever the fuck it is, they're just not going to find nearly enough supply as there was before. And so then how the market prices that in and reacts to it, like right now, if you needed 100 Bitcoins a year to run your business, let's say, you might want to get that soon, because the way it's trading, if you were to divide that up into 8 a month or whatever, then you're fucked, because it may be double in 6 months than it is today. And
that's
so
the best way, say, like, you guys are doing a big recruiting push, and one of the things that really helps with recruiting is you guys get year-end bonuses in Bitcoin. And that, with the amount of hiring dues, we're going to need to buy 20 Bitcoin between now, this Christmas. You might want to price that now, right? Because there's a halving coming, right? If you can't, that's what halvings. I know it's a I say, you're trading a market with no inventory. You're on thinner ice. You're just got to be a little more cautious in normally how you'd run that business. I would price that now, because you're right. You got a halving coming up. Do you really want, right, to have a commitment, a rent payment, or like I said, an employee bonus plan that you're going to have to walk back because you can't afford it? So that's why I would encourage people, if you have any Bitcoin needs in the coming year, to start pricing that before the halving.
100%. Well, why do you think Satoshi set the monetary policy the way he, she, or they did? We've had these conversations, but why such an aggressive 50% reduction every 4 years? Why not a little bit every year? As someone who built financial markets your whole life, what What were they trying to incent? Why'd they do
Sure
that?
make my life a lot easier. I have no idea, and I also have no idea why. I've listened to Bitcoin podcasts right ever for however many years now, and I never hear anybody talk about that. Why are we waiting 4 years for a halving? Why not a more gradual reduction? How about 1/4 of a halving every year? How about 1/12 of that every month? Right, and it'll help me manage. Satoshi clearly has some background in financial markets or some fluency in it, right? Because the way he talks, give it a try. You never know. If you take, just academic ways to price wealth and how currency relates to that. So he's clearly got a lot of overlap there. Why not give us a break? Have it every quarter, every year. That big deep breath. Well, you guys are going to have a bigger problem because you're trying to run a business. I'm just trying to manage a position. But yeah,
I think, but I think he did it.
How are you going to manage a mining business when you're going to get half, right? The consideration.
We had that conversation, Dylan and I. Mining, fuck out of here. I mean, I got all the respect for people that do that, but you think I'm going to compete with planet Earth for energy, and then the protocol is going to take half the raw material from under me? Fuck off. There's no chance I'm putting myself through that. Strike is hard enough. There's no way. Anyway, but what about when it comes to the halving? So my opinion, Dad, is that Satoshi was trying to strum up some speculative nature and get the thing to go bid, because the way that he designed it, first of all, I find two things about the design fascinating. Well, why don't you do 10 Bitcoin a day, and then it'll be hundreds of years for all the supply? But instead, Satoshi issued almost all of it immediately. If you look at a Bitcoin supply graph, in the first early years of it, it's almost all gone. And then the last 100 years of supply issuance is just baby drip drops. And that, to me, is he's trying to incent early adopters and for people to pay attention and for people to have an advantage for being first, right? Like that's the only reason you'd show up early to a party, or you show up early to a banquet, or you show up early to anything, is if there's an incentive and you get to gain benefit. Time is the most valuable resource you have. You would never give your time to anything else unless what you got in return for it was more valuable. So the fact that I got a leg up on someone else by knowing about Bitcoin earlier and understanding it earlier, I assume he did that on purpose. And then the other is every 4 years, 50%, is because they knew that that is enough inventory reduction to make the thing go haywire. Like Bitcoin's almost programmed to go through these just puke sickening rallies to the upside, and then it's going to take the stomach out of your body to the downside, almost like science, just by the way it's programmed, in my opinion. And I said this on the last episode. In my opinion, Bitcoin has a skeleton of how much market cap it can support. And I never had this conversation with you, Dad. I'm actually curious. I think if you were to try and take, what's Bitcoin's market cap right now? Let's see. Is it $1 trillion at this point as I'm talking? I'm looking coinmarketcap.com.
Not all
Yeah.
crypto is.
Bitcoin's $1 trillion, $1 trillion market cap, almost on the nose. Okay. So we're trading right now at $51,822, and we're just over $1 trillion market cap for Bitcoin. If you were to take that market cap and say, let's say we rewind time and everyone that understands Bitcoin now understood it then, and we would be $1 trillion market cap after the first block. So 50 Bitcoins in issuance, you'd have to fit $1 trillion of wealth into 50 Bitcoins. And Bitcoin just didn't have the skeletal as a currency to support it, because as soon as the next block was mined, then everyone's diluted by half, because now there's 100 Bitcoins and the $1 trillion I think the way I think about Bitcoin is people are like, are we going to go hyper Bitcoinization? Bitcoin going to go to $10 million this cycle? I think it's impossible, because it doesn't have the skeletal to support a market cap that big. So what Satoshi had the problem of, I have to get these things out as fast as possible, as long as I'm being fair about it. Because if I give it all to myself or I give it all to my friend, then I ruin the whole project. So I have to be fair, but I got to get them out. So 50 each block, boom, 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 boom. Because the more issuance, then the less you're diluting existing holders effectively. It gives it more of a skeletal to support something. I still don't think Bitcoin has the skeleton to support Saudi Prince oil money. I don't. I really, truly don't. Gold, to your point, gold barely has that. For people that are like, gold's a good inflation hedge. Yeah, bullshit. Bullshit. It's not. So I don't think gold can even support that. I think Bitcoin, I think it's going to take a few more halvings for the stock to flow ratio to get low enough where new blocks mined aren't so dilutive. And Satoshi designed it in this way where he was like, I got to get these things out into the marketplace as fast as possible. And then I have to program in an inventory reduction that's going to bring such speculation to make enough noise for people to pay attention. Because then if it's going to be the best performing thing that goes up 8,000%, then you can't ignore it. Where if it kind of blended into the background, it'd be much harder to get attention. I think it was an ingenious design that tried to get attention on purpose, and the market cycles that we all go through are almost programmed in. At least that's the Zen. I live through this stuff. And nowadays, I know when it's going to go down. I know when it's going to go up. It's like clockwork.
No, we as to like why it doesn't have a more sensible supply reduction, why a deep breath every 4 years instead of a more gradual reduction every year, every month, etc. And it's the same as why 21 million. The only thing that at the end of the day that I think you can say is that he got it right. I don't know how, I don't know why. If there had been a different, instead of 2140, if it had gone to 3140 or a different reduction schedule, I mean, that's really the only thing. I don't know really why. I've never heard a decent explanation for why we have to take a deep breath every 4 years and why we can't have a more, like I said, more gradual, easier to run your business, easier to manage your finances, easier to pay your taxes. But I don't know. They got something right.
I think that's how you bootstrap a network.
What's everyone else trying? Right? Look at how many citations are at the end of the white paper, right? He makes sure to cite that he is building on the efforts that have been going on for a long time. I don't know how he got that number so well.
I think it's just how you bootstrap a network. I think if you're a new currency network, you just want to be acknowledged. And it doesn't actually matter if the people acknowledging you like you or hate you. Like Larry Fink, for example. Larry Fink acknowledged Bitcoin long ago and he didn't like it. But then something changes and then you like it. So as long as you know we exist, and the best way to get a network effect and make sure people know you exist is if you put the market participants through such drastic inventory reductions. Like the commodities market, you're now over 40 years, almost 50 years in markets like this. There's no such thing as a 50% inventory reduction overnight. That's unheard of, right? So I think he did that because you just have to be noticed. And then as long as you're noticed and everyone's like, oh, there's a digital scarce internet currency that seems to have a fixed supply cap. Oh, it's for drug dealers. But at least you know what it is, because then as soon as something changes your mind, like the Fed changes its monetary policy, or we go to war, or El Salvador, or you need to buy a drug on the internet, whatever that moment is for you, then at least you know what it is. I think that's why he did it.
Right. No,
anyway.
And I'm sure he was well aware of the trade-offs that he was going to trigger. If you do it that way, you just fire hose it out, where you did, whatever percent of the issuance and right out of the gate, yeah, you're going to get, somebody's going to throw their hard drive and then try to dig it out of a landfill 5 years later when they realize what happened. Someone's going to pay 10,000 Bitcoins for a pizza and probably kick himself for the rest of his life, right? I mean, there's nothing, you knew he had to have known that was going to happen by fire hosing it out to everybody, and not a more gradual.
But you got to get it out, or else it's so dilutive,
right?
You got to just spray it out.
Free sample, right? I'm just going to give everybody.
And I'd argue that we're still in that era today. It's still being sprayed out. For people that think they're late to Bitcoin, no chance. Like, you can work a normal job and have a cost of living that's lower than your income enough to build a position in this thing that's going to be meaningful. We're still in the sprayed out. Like, I swear to God, I'm telling you guys, your Bitcoin doesn't have the skeletal yet to support Saudi money, or if of course it does. I mean, if it had to, it could. Like if the bond market entirely collapsed and we went through a great reset, could we all move to Bitcoin? Of course we could. But if I think that humanity is going to logically adopt this and it isn't going to be drastic and it's going to be, I walk outside and there's cars on fire and people shooting each other and we go through like a great reset type of depression. I don't think that Saudi money, for example, or any big sovereign fund is going to be willing to dump a $10 trillion worth of wealth into this thing yet. So you're still in the spray it out phase where we have a chance. We're kind of crossing that chasm because now you got to outbid Wall Street, which is the last topic I wanted to ask you on. So you're getting to the point where you might be late if you're a normal person, but I still think we're early. We're very early. It doesn't have the skeleton to support $100 trillion market cap. It really, not yet. It will. The more it halves, just so I can get the point home to everybody, the more that it halves, the more its stock to flow ratio improves, which all that means is the existing Bitcoins that are out in the world versus the new ones that are being issued. That ratio is phenomenal, which is another way of saying that existing holders of the currency aren't getting diluted by the new supply. And so the better that ratio is, then the more it actually has the grounds and meaning to support trillions and trillions of dollars of wealth. Because if I'm a Saudi oil guy and there's 50 Bitcoins that exist and there's another 50 coming in 10 minutes, I'm not going to put $10 trillion into the 50 that exist because then the next guy that gets 50 just won $5 trillion. That's bullshit. So I can't afford to put it into an asset that doesn't have the skeleton yet. So I would say a few more halvings before this thing could be like $100 trillion asset that runs the whole world. I think that we'll get to gold. I think we'll see like $10 to $15 trillion market cap, which is, the 250 grand to $1 million Bitcoin in this next cycle, just based on the skeletal. Anyway, all right. I know we probably got to wrap up soon, but I want one more topic, Adia, is the ETFs and the Fed. So you were born while America was on the gold standard. You lived through the fact that we then left the gold standard, and you've now watched the Federal Reserve. You've been watching the Fed for decades and them managing monetary policy and coming up with excuses to print money and bail people out. And now watching Wall Street adopt Bitcoin, in my opinion, they see money printing in the future. You got to start picking your horses of what you want to own if the U.S. government's not going to protect the dollar and they're going to just print the living hell out of it. And it's fascinating to me that Wall Street is starting to pick Bitcoin as one of their horses. That's, in my opinion, all that's happening. Like gold going up in the face of a hawkish Fed and a Bitcoin ETF being approved is everyone's getting ready to run the race of more inflation and everyone's saddling up their horses, placing their bets. And the fact that Bitcoin's one of the horses couldn't be more bullish. But as someone who's been watching the Fed for 40 years or whatever, what's your take on how they've managed COVID and all the Keynesian printing they're doing and the ETFs? Do you have any opinion on how these guys have managed monetary policy?
Oh, well, I mean, just in broad strokes, that this is much more of a, I don't know, like the Volcker Feds, they would do dramatic things. Shining Volcker even authored something, I think it was called the Saturday Night Massacre, where he raised the Fed funds rate, I don't know, 300 basis points on like a Saturday night or something. Just letting you guys know who's in charge. Have a nice weekend. Whereas this Fed goes out of its way to talk about what they're going to do, what indicators they're looking at, what they're featuring, and it seems very gradualist. It seems like they're just managing. You got to roll over a lot of debt. There's nobody on earth that thinks, this government is ever going to satisfy this amount of indebtedness. We all know that. So there's only two ways out, right? You either default or inflate, and the U.S. cannot default on our debt, period. So that's, I don't know. This is a third way to get out of over indebtedness. Go run up a lot of debt on your credit card and then tell me how you're going to get out of it. Well, I'm either going to default on it or I'm going to pay them back with cheaper dollars. more plentiful dollars. I'm gonna invent. Can I pay y'all back in bill dollars? Because I'm gonna print a bunch of those, right? I mean, that's the only way out of debt. Is you're gonna have to print your way out of it, and that's, I mean, fixed assets. Which assets are doing well? Oh, you're really good because you bought some nice real estate in Chicago. You're really good because you got some precious metals. Oh, you're really good because you got some Bitcoin. Those are all basically the same trade, and that's all short dollar. Is all you're buying a fixed asset for the one that they're gonna print. I just think on that menu, Bitcoin is by far the best fixed asset. Real estate, sure, but that real estate's such a sitting duck for taxation, and that's where governments go right when they're broke, is property taxes. I'm sure you guys are aware of that. And what else can you do? You just gotta inflate the money supply, because default's not an option. So you got a position in fixed assets, and Bitcoin is the fastest horse.
Yeah, your short dollar portfolio is my favorite. It's
pretty much one way. I know. I like to say I'm diversified, but I am pretty much one. That is just different iterations of the same trade.
We've just been trading short dollar ever since I became an adult. Is own Bitcoin, and then when Bitcoin gets to a level where it's just too much, that's too much of a rally, you got to realize some of the fiat gains, then roll into real estate. Just get a place you love to live in. And then I love that you own, the last one that I think is lesser talked about is you love owning exchange stock. Like you love owning the Chicago exchange stocks, which I find a fascinating short dollar play, because if you leave the gold standard and you inflate the currency, everyone's a speculator. And if everyone's a speculator, then exchanges are a great business. And so like the CME, the Chicago exchange stocks are at all-time highs. So your short dollar portfolio has always been Bitcoin, real estate, exchange stocks, and it's just the way to monetize Keynesian nonsense, right?
That's correct. Yes.
Yeah. Okay.
That's been listening to you, Cookie. You probably read the books. Yes, that is. Just there are different iterations on the short dollar, and I don't see how anybody in my position, thinks I'm just going to retire on the fiat in my bank account, because they are going to devalue that. I mean, QED, I don't see how the purchasing power that you're planning on living the next 20 years of your life on is going to be there in a fiat account. You got to get it into some type of hard asset.
Yeah. And I think people don't necessarily understand too. And again, we won't get too personal on this, but Bitcoin has been the greatest thing that I think's ever happened to the Mallers family. For all the things that have been accomplished in generations before, yes, the short dollar portfolio that I was, raised to understand is own Bitcoins, make sure that you own some property. And then if you want to own equities, exchange stocks should be a good trade because everyone's a speculator. But it's really just like a Bitcoin or bust family. I mean, let us know what you guys think. If you have any more questions, things that you want to hear my dad's opinion on, you can come on anytime. We just record our Bitcoin conversations as opposed to just doing it on FaceTime in private. But you're really getting exactly what we do usually.
Do your Bitcoin overdosing. Make everyone in your family that's sick about hearing about Bitcoin get it done now, because you're gonna have to wait another 4 years to trade a halving. And then I know this is a big event. I think, I don't know. This is the first halving where we've got ETFs and a lot of public market participation and nation state involvement, and now we're gonna have the new supply and. Prices, like I said, I rarely get a chance to get a front row seat for a real financial revolution like this.
Yeah, 100K to $1 million, depends on how many dollars. We're pricing it in a piece of paper they get to create more of. So that part's not up to us, but somewhere in that range. That's what I think.
You're pricing it with a piece of paper that I have no idea how much they're gonna make in the coming years, right? Yeah.
All right. Well, thanks for listening. Please, comments, questions, feedback. It's valuable and important to us, especially for next episode, so we know what you guys want us to talk about. But until then, subscribe also, right, Dylan? It helps us get the message across when you guys click the like buttons and stuff, I was told. So if you wouldn't mind hit the buttons because I think it helps us reach more people.
See you next Monday.
But really appreciate you guys, and we'll talk to you next time. See ya.